Greetings, members, one and all of the Salivation Nation. Bitcoin, gold, or the dollar? What the big money managers prefer? Let's explore. That is a question that was posed on a forum recently to some of the big money managers. The bosses over at Bridgewater, BlackRock, and Goldman Sachs were asked about, well, which would you prefer to be paid in a dividend, for a rainy day fund, let's say. And of course, this comes on the heels of learning some news about how big the money is getting for the ultra wealthy around the world. In fact, we know that it is Elon Musk who has really been riding sky high, not only in terms of, with SpaceX and the like, but, Tesla has gained $100 billion in market cap and a $4 billion revenue order, while Elon Musk has added $29 billion to his personal wealth as a result. I think in some ways he ought to be included in this conversation as an individual, as well as these big money managers. I would think somebody who earns that much money would probably want to contemplate about what that money means and the value of that money. Money comes in different forms, as we know, but nonetheless, what is the most stable and sound form of money? Well, we know that Elon Musk has kind of dabbled in some of that in the crypto sphere, but nonetheless, that is kind of where part of the conversation ends, or has been leaning more towards in this modern society. But there's something to be said about, the dollar and, of course, gold as well. And we're learning more about what some of these companies are doing, and their discussions are talking about this in this article that I'm going to be referencing here from Market Watch. And there is a call of the day, circles back to that crypto, as it eavesdrops on the fifth future investment initiative running in Saudi Arabia, known as the Davos in the Desert. It's the opening panel, which may have revealed insight into big money managers' feelings about cryptocurrency in that meeting here. And that is Blackstone co-founder Stephen Schwartzman, Goldman Sachs CEO David Solomon, BlackRock CEO Larry Fink, Bridgewater Associates founder Ray Dalio, and Mubadala Investment CEO Khalid Al-Mubarak, African Rainbow Capital AAL founder Patrice Molset, and Anna Boltin, executive chairman of the Santander Group. And the group was posed a question at the end of the panel: what if they could be paid a dividend by an imaginary board? Would they choose dollars or some sort of currency, depending on what country they're from, some gold, or Bitcoin to put under your bed for a rainy day? And so the first to answer that question was Ray Dalio. I can't put them mixed together, I guess. I would take the gold. I would like to sprinkle a little bit of Bitcoin into that mix too, he responded. So therefore, if he had to choose one, it would be gold. That's right, and I think that Dalio has been relatively bullish on gold in the past, and so in some cases we can't necessarily be surprised that he would choose that answer. Gold is a fabulous metal, and it has the longest track record of a proven store of value, and certainly has proven itself to be that store of value as a hedge against economic instability. So therefore, it is incumbent upon us to follow Ray Dalio's advice, I think, in stacking this precious metal, which I think is most of us in this community see the value in having gold as money and as a store of value, and we hold it dear in such a way. So there you go. It goes on to say, Dalio goes on to mention here, the biggest asset is human productivity, and if you can tap that, so I'm looking at the new technologies and all of those things, it's very, very exciting, Dalio said. Gold is a dead asset, But the amount of printing of money and the devaluation of debt is a big force too. So I want the technology, a little bit of Bitcoin, and I want to bet on those other industries. And now I'm going to, stop him there because, he calls it a dead asset. But, when you think about it, is gold alive anyway? It is inert. It doesn't have breath. And of course, when we start talking about life in terms of those things that don't have any biological function, well, that means that they essentially produce. Living organisms, they have cellular division. They're constantly regenerating and the like. Whereas gold is an inert object. It doesn't really necessarily produce or pay dividends. But that's not what it's about. It's about wealth preservation. It's about the storage of wealth and value, store of value that is maintained, does not grow. That's the difference between gold and some of these other assets like, Bitcoin, which fluctuates in value, and the dollar, by design, depreciates in value. So I think in that way you could call it a dead asset, but I would say there's a lot more to it than just that. And in fact, I think that is one of the attractive functions of gold is that it is not necessarily a living and breathing thing. It is inanimate. It is there. It just is mere existence. That intrinsic value is what provides that attractive quality to it. Why people flock to it as a store of value and a protection, an insurance policy. Next up in the conversation, and the question was Blackstone's co-founder Schwartz, who said he just wanted to own earning assets. As long as you can make things better and own wonderful things, you can come out and you can own dollars, or you can own whatever you want to convert that currency into. But you'll have more and more and more, and you won't be a professional victim. Well, it almost sounds like, to a sense, that he's talking about, dollars and making those dollars work for you by investing those dollars in other aspects to grow your money. And yes, it's a little bit risky to do that, but you can certainly grow your wealth if you take those dollars and invest it and diversify into different investments in the stock market. People have done very well in that and have grown beyond just protection. They've actually made money, but there's a risk of losing money in that aspect as well too. And by the way, that's not to say that there's not risk with owning gold too, because gold has, if you take any 2 dates, in fact, if you look at from August of last year to August of this year, gold has lost money. There's no question about it. But it's a matter of how you buy it and when you buy it. And those are the two factors really that can help minimize that risk, is if you use dollar cost averaging in an intelligent manner, as you've heard me talk about on this channel time and time again. It's seen as an insurance policy, but that is certainly something to consider. So yes, the opposite can be done with currency too. But as you take those dollars and invest those dollars into different portfolios and stocks and what have you, you have the potential to grow based off of the percentage climb in that stock. The stock market right now is at an all-time high, but the inflation is rising too. So you're fighting against a deflating dollar with inflation, and you are essentially hoping that the returns that you have on your investment will outweigh the consumer price index and the inflation rate. There is that. So Santander's Boten said she would take 50 cents in euros and 50 cents in dollars. Punto. All right, so there you go. And so it sounds like she is in 2 different currencies here, the euro and the dollar. So that is what she would choose. Although I would say that would be a losing proposition for her, because euros, just like the dollar, are they're inflating. And by design, the European Central Bank and the Federal Reserve, they target the devaluation of the dollar. and of course the euro too. I'm not sure what the euro's target is, but for the United States it was 2 and then 2.5%. Now we're living with 5%, and they hope for it to go back down to 4%. We shall see. But nonetheless, Santander's Botín is all about cash. Also, less Bitcoin keen was a response to BlackRock's Fink, who responded in using Ray's statement about technology and innovation. And what Steve said, I put 100% in dollars. Interesting. All right, so these people are choosing dollars, fiat currency, and that's kind of where they are at. Of course, he's less Bitcoin keen. As for Goldman Solomon, he said, given the topics the panel had discussed, which included battling climate change and corporate diversity and energy prices, he thinks the glass is half full as a broad global community, and in that construct, I chose dollars. Well, if you talk about climate change, it does take a lot of energy to mine Bitcoin. And the blockchain takes a lot. It's very inefficient. But, Bitcoin is the top dog in the cryptosphere. And it's making people a lot of money right now. And it is volatile, but nonetheless, it has been on fire. And people like that. And it's got a huge market cap, growing tremendously, for sure. But it certainly does use a lot of energy, and some people equate that to contributing to global warming. African Rainbow Capital's Motsepe said he's got 50,000 mine workers on the company's mines. His choice would be gold. All right, so there you go. So far, not much love for Bitcoin from these big money managers. It looks to be that gold and the dollar are what is driving it. So Dalio for gold, and also African Rainbow Capital's Motsepe is also voting for gold in this case. Interesting indeed. All right, very, very good. One more highlighted from that panel. Fink also said there's a high likelihood that oil will hit $100 a barrel. I agree with that. And Dalio weighed in on the billionaire tax, which is being discussed in Congress. So there you have it. Pretty interesting analysis here, or answers from this panel discussion, and what they think. Fascinating indeed. Bitcoin, gold, or the dollar. If you enjoyed this video, I hope you will consider commenting and thumbing the video up. Yes, indeed. Let's see if we can get 1 thumb up for every 2 views this time. We won't go for 1 for every view. How about that? All right, there you go. Hope you enjoyed it. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.